la elección por parte de Joe Biden de Jerome Powell como presidente de la Reserva Federal. También vamos a hablar de inflación y lo vamos a hacer con Edward Moya, Senior Market Analyst de Oanda. Edward, thank you so much for giving this interview to Negocios Televisión.
Thank you for having me.
First question is about inflation. Do you think it would be temporary?
Well, right now it seems that we're going to have inflation remain elevated all the way for the rest of the year and probably deep into the first quarter and possibly second. But I think you will start to see pricing pressure subside around the middle of the next year.
Joe Biden picked Jerome Powell to lead the Fed for a second term. What can we expect from him now?
Well, continuity at the Fed was important, and I think markets are rejoicing that decision. I think right now you're probably going to see that the Fed is now in position to continue along with tapering and possibly accelerate it next month, which should leave the Fed in a position to raise interest rates twice next year. If inflation turns out to be a little bit longer lasting, you might see the Fed have to act sooner, and I think having Fed Chair Powell provides the market with this belief that the Fed can be nimble next year and properly address inflationary pressures.
Let's talk about Europe now with the new COVID wave that Angela Merkel considers to be the worst till now. What can we expect for European markets? Can we see a market correction now?
Well, I think you could see some short-term weakness here, but overall, the growth potential in Europe is still there. I think we have to remember, as we've been trading throughout this pandemic, the U.S. growth story has largely been priced in. The fiscal response has really driven that, but in Europe, it has lagged somewhat. So I think that you're going to see, I think, a strong resistance to go towards following Austria and delivering more nationwide lockdowns. But I think you're probably going to have investors are understanding that Europeans, they're focused on trying to live with COVID, and I think as long as you don't see hospitalization capacities threatened, I think you're going to see less hesitancy to deliver more restrictive measures. So I think Europe's going to be a very messy trade, but I think overall, the growth potential far greater in Europe than it is in the U.S.
For now, we do have this economic expansion. What threats can we expect for it?
Well, the biggest risk remains inflation. And if the Fed is wrong about inflation, I think you'll see that the economy could really be thrown into possibly a recession. If the Fed has to accelerate interest rate hikes, what you'll see is that will completely disrupt financial conditions, and it will pretty much end the economic recovery in the U.S. And I think that is a growing risk. It's not the base case by any means, but it is a growing risk. So I think these next couple months, the inflation readings might be a little bit hotter, but they need to start coming down. And I think there is optimism that will be the case. But if COVID really disrupts the global economic recovery, you could see the Fed be forced in a difficult decision.
The end of the year 2021 is near. What can we expect for companies' earnings?
Well, I think right now what we're starting to see is these wage pressures. I think the problem that a lot of companies are having, especially the larger ones, is that it's difficult to find the right talent. It's difficult to attract people, and you're seeing a lot of companies are hesitant to follow through and deliver what the market is asking. So I think you're going to see margins are going to be threatened, and this is really going to complicate the evaluations as we go forward and into next year. I think everyone has priced in a strong U.S. consumer, but even a lot of these retail stocks are not rallying into year end. So I think it's going to be a very choppy trade. Even as the NASDAQ makes fresh record highs, about 12% of the NASDAQ is making fresh 52-week low. The recovery is unbalanced, and I think it's going to be a very choppy trade. But I think in the end, there is still strong optimism that you'll see some, good returns if you stay steady for U.S. equities throughout all of next year.
Stay steady then. Thank you so much, Edward Moya, Senior Market Analyst at Oanda. Thank you.
Thank you.